Visa is a global payment tech company that connects consumer, businesses, banks, and governments in more than 200 countries and territories, enabling them to use digital currency instead of cash and checks. The company overall is a beast with its financials, and I truly believe it should be a key component on a dividend stock portfolio. When taking into consideration the purchase volume of the credit card network, the latest data from 2021 indicates that Visa holds 52%. This is more than the rest combined. Looking at the cards in circulation, in other words, the credit cards issued, we still see Visa dominating with MasterCard in second. Lastly, looking at the market share, Visa is dominating with 61.6%, while MasterCard has 25.7%. Those two combined take around 87% of the credit card market share, confirming that this is a duopoly. Bit of a spoiler is that MasterCard has similar financials to Visa, but with less market share. This could be a potential growth for MasterCard in the future as they have room to grow. Since this is a Visa video, then we have to go with Visa, but keep in mind that both Visa and MasterCard are similar businesses. So how Visa has been doing in the last 5 years from September 2017 to September 2022. Visa has been crushing it. In total return, it has beaten the S&P 500 every single year, and in some occasions also beating the data processing index. So seeing that Visa has had a pure dominance in the market share for data processing and also destroying the S&P 500 in the last 5 years, the question follows, does Visa have the fundamentals to justify all of this? Let's take a look. Visa is currently trading at $240 per share, and year to date they are up 16%, performing slightly better than the overall market. The revenue of this company is astronomical. In the last decade, they were able to compound their revenue by almost 11%, ending with $22 billion in 2022. Visa is not capital intensive as other businesses. As long as their servers are good and running, the payment processor will run smoothly. Visa does not need to expand like retail stores. The capital expenditure they usually go through is to keep servers running and up to date. This makes Visa have a high cash conversion, therefore a high free cash flow after taking capital expenditure from the net income. The numbers are out of this world. 23% in 1 year, 36% in 2 years, 15% in 5 years, and 14% in 10 years. This is even taking the stock-based compensation into consideration. By this metric only, I can blindly say that Visa is one of the best companies in the world. Being a dividend payer and having extremely high free cash flow, it means that Visa can increase their dividend at higher rates. In the last 10 years, the average is 18%. To put into perspective how big is the dividend growth of this company, in the last 10 years, Apple only increased their dividend by 8% and Microsoft by 11%. So Visa is absolutely crushing them in dividend growth. We do not stop there. Over the last decade, Visa has been buying their own shares, reducing the shares outstanding by 5.74%. Long term, this increases your stake as a shareholder. Looking at the return on capital employed, Visa has an astonishing 29%. For every dollar they invest, Visa gets 29 cents in return. We generally want the ROCE to be double the interest rate, so this is very good. So we have a company with global presence, strong brand reputation, valuable partnerships, and secure infrastructure that generates a massive amount of cash. This does not make Visa indestructible. Every company carries risk of any sort. For example, having a massive duopoly by Visa and MasterCard could call the government attention and start attacking the company with regulations. Another risk, even though it's minimal, at the moment it is dependent on partners' institutions. Visa does have strong connections with banks, but it's also good to always keep an eye. But again, a partnership deterioration is highly unlikely. Also, competition could make Visa lose market share. As mentioned, MasterCard have massive room to grow their presence. To give a spoiler, I want to add MasterCard to the portfolio as well. I do not mind the overlapping. Both businesses are similar and combined they pretty much own the sector. As for my holding in Visa, I currently have 1.62 shares with an average cost of $242.71. This composes 2.83% of the portfolio. I am less than 1% down on the position and I'm keeping an eye for any substantial drop. I plan to own Visa for decades and easily could be a core position of the portfolio. Right now, I'm doing some DCA on Pepsi and Hershey's, but as soon as I see a downturn, I'll be ready to buy some tranches. So that will be it for this video. Subscribe for more straight to the point content. Thanks for watching and I'll see you in the next one.